Mastering your routine, the key to part-time trading success. Welcome to today's Morning Coffee with Mike. Yes, part-time trading, routines. If I didn't have a solid trading routine and a flexible trading routine for that when I was trading part-time, probably wouldn't be speaking to you now. When you're trading part-time, it's very important to be efficient with your time. We're going to talk about that, some of the key things when it comes to trading routines, limited time, market hours, information overload. We're going to touch base on each one of those things and how we can become more efficient and trade better part-time. So, as we're going through this, just like always, as you have questions, hey guys, how you doing? As you have questions, type them into the chat, and we'll take questions as we go. So, the first thing that I want to talk about in relation to trading part-time and setting up your routines is information overload. How is that related to part-time trading and your routines? If you're looking at too much information and you're looking at information at the wrong times, just random times throughout the day, let's say you're someone that you just placed a trade, you're looking at your trade, and you got your P&L open, and let's say that you're clicking the button and you're pressing that refresh button. You want to see the new P&L, you want to see the green and the red lights flashing. If that's you, one of the things to ask yourselves is, how is that benefiting my trading? Is that something that is leading me? How is that leading me closer to my end goal? My end goal being, of course, more profits. Is that serving you? Most people, in fact, I've yet to meet anyone that says that actually helps them make money. So when we're thinking about our trading routine, we want to think about the activities that's going to lead us to the desired result. What do we want? We want a system that's going to make us money. Great. So what types of things do we want to include in that routine? And then by default, anything that is outside isn't getting done, right? We're going to stick to our routine. Great. So that's going to apply to information. It's going to apply to the market hours. It's going to apply to the time as well. They'll touch on each one of the things on today's agenda. So, information overload. What types of things do you want to bring into your trading? What do you want to screen for? What types of stocks are going to produce the types of moves that you're interested in? Everything else should be off your radar. Personally, I'm interested in growth stocks. The reason why I'm interested in growth stocks is because I want to take advantage of the ability to compound gains quickly. If I find trades, I want them to move quickly. If I find winners, I want them to move quickly. If the trade is not going to be a winner, I want it to show me that it's a loser right away. I don't want to be stuck in a trade that's going to take weeks or longer to find out that, yeah, that trade really wasn't going anywhere, that trade was a loser. No, I want to know same week, same day if possible. So figure out what types of information you want to include. In fact, I'll show you some of the information that I include in just a little bit. Some of the information includes screening. What am I going to screen for? I'm going to screen for fundamental data that's going to show me, well, what are the growth stocks that I'm interested in, right? So put that on your checklist of things that you would want to filter and screen. You want to get a small window of things that you're looking for. Next, you want to figure out, well, what market hours are you going to participate in? It's going to be different for everyone. It's going to be different for when you're going to want to do your routine, do your research, do your planning, when you're going to execute. If you're trading part-time, Well, what I found was that my schedule would be erratic. It would be erratic. I wouldn't be able to say, okay, every single Tuesday at 5:30 p.m. I'm going to be able to do my trading routine, right? And be able to begin to research stocks and craft trading plans. A lot of it had to do with when am I able to fit in time as my week would change. It's dynamic. When you have a job and other obligations, sometimes trading's not the main priority, and you're trying to fit it in. So when you break out your calendar, though, you're able to know, well, how much time, what kind of a time block do I need, and what's the minimum amount of time that I'm going to be able to have during the week if shit hits the fan. And that's kind of like how I like to view it too. Having a shit hits the fan plan for your trading. Just think about all the different types of things that can go wrong during a day, and what am I going to be able to do on those kind of days. If you're able to plan for your worst case scenario, then the best case scenarios will end up taking care of themselves. So figure out how much time are you able to dedicate during a particular day, and even during the week too. Well, what are you going to be able to allocate and block that time? And if you need to block it week to week, then that's what I did. That's certainly what you could do too. I find that when time is actually blocked on the calendar, that's the time that tends to be sticky. That's the time that actually happens. So if I am going to be doing trading research for X amount of time, then I want that to be on my calendar blocked out. Speaking of limited time, well, one of the things that does take time with trading is doing your research, screening, scanning, filtering down into the best of the best trades, coming up with a trading plan, executing said trading plan, and especially when you're trading part-time, your life is dynamic, your life is changing. Same thing happens when trading is your main focus, like it is for me. But one way to save time, and one way that I did save time when I was trading part-time, and I spoke about this in the book too, in the Trading Mind Wheel book that is right behind me. You can see it back there. One of the things that I did to save time was buy research. Well, what do you mean buy research? Exactly how it sounds. I bought somebody else's research to save that time and still be able to trade the market in my own way. Should you be buying research? If you know and trust the person that you're buying the research from, then I think that it's okay. If you're just buying some random newsletter that you don't know the process and the methodology behind any of the research, then it makes it a lot more difficult to trust that research. That was a problem that I found much earlier on in my journey as well. When you find research that you're able to trust, that you know exactly what's going into the sauce, it makes it a lot easier to take the research because you know where it's coming from, and then go and do your own work. One of the things that I offer people is the research that I do. So let me share with you the research that I do, some of the research here. So you could see what I'm talking about, and exactly, not only that, but what some of the routines look like here. Right, so let's get rid of that box and put this over here. So there's a lot of stuff on this spreadsheet. There's, right now we're looking at the action list. There were a lot of stocks that were traded this week. So the action list is fairly large. We've got 1, 2, 3, 4, 5, 6, 7, 8. There's 8 names on the action list for this week, and they were added at different points, but you can see that part of what I'm doing here, and this sheet, by the way, also acts as a journal as well. So ticker, the setup type, the stage of the setup, when earnings are, my gut feel on the trade. The gut feel is always going to be 5. I'm not feeling that something is a 5-star trade, then I'm not going to be interested in it. So when it gets to this point, it's a 5-star. Then the notes, the entry notes, what I like about the trade and why. Then the sector, the relative strength over the past 3 months, 6 months, current. Then looking at the industry group rank, the current group rank, the last week, past 3 months, past 6 months, the trade grade, which is a little bit different than the gut feel. The gut feel is the initial reaction. Then when I start to get detailed on the trade, and I put it through this tool that I created called the Trade Gauntlet, that's going to generate a composite score for the trade, and then it gets assigned a letter grade. The link for how each trade looked at how the setup looked. So here's an example of IAS. It was setting up in this double bottom and multiple levels of confluence around both the entry price and the stop. Give the exact spot where I'm planning to enter, my stop loss, my target, and then get into some other stats over here too, which are pretty cool. So the percentage, the initial risk on the trade, so the distance between the entry and the stop. On this one it was 4.92. The potential reward of the trade, where my target is, about 17.5%. And then the reward to risk multiple. This is a potentially 3.5R trade. Market condition, I'm adjusting how I size my positions. We go into that in our program. Then some other stats here for the size of the position, how much capital I'm risking, when the trade was actually taken, etc. And all this stuff is given out in advance the day before, the night before. So that way, that's when I'm doing my work. I do all those trading plans, trade analysis the evening before, and then that way I don't have to worry about it the day of. It's setting it up at night, and then during the day, just let the trades go. And then as the trades progress, I'll update and send updates for my trade management plans and manage a trade as we go. So all of that is ways that you could end up saving time. Because if you know exactly, if you see the setups, right, like you're buying research, you're seeing somebody else's setups, they're telling you precisely what goes into the sauce, then you're in a position where you could say, I trust this, I don't trust this, I like certain parts of it, I'm going to use it in this way. You know exactly how to use it because everything is given to you. There's no proprietary stuff that's getting in the way that's causing confusion. So all that stuff is available on MaraWealth.com. So go check out MaraWealth.com. Let's answer some questions in here for routines. So again, while I'm scrolling through the question list, again, when you're trading part-time, it's going to come down to your trading routines. A trading routine is extremely important. Whether you're trading part-time, full-time, your routine is always going to be very important, but it's especially important when you're trading part-time because you've got to be extremely, extremely efficient. Filtering out the noise is exceptionally important. That's one of the things that's going to be a huge time saver. Knowing precisely what you're looking for, that's a huge time saver. having blocking your time and managing your whole process, setting your whole process up to be able to accommodate for the worst case scenarios where everything is just hitting the fan. And then the last way to save time that we spoke about was getting the research done for you and using that. So questions here. I'm scrolling through Instagram to get some of these questions. Someone wants to see the technical analysis. Okay, so let's come back over to here, and I will share some of the charts. All right, so let's pull up IAS. All right, so here's IAS. There's a few things on this chart that we could highlight. First thing is the overall pattern. I'm looking at this pattern as a double bottom. It's a double bottom because it has that W formation, but it's not just like, oh, it's a double bottom, like it looks like a W. It's also that this pattern took 7 weeks to form. There are rules to follow. If you're looking for particular setups, those setups should meet certain criteria, and you should define what that criteria is. For me, the criteria that I've set is that I want my double bottoms to be at least 7 weeks long. I want them to be about anywhere between, say, about 20 to 35% deep. Where did that come from? It came from years and years of research of what the best stocks throughout history have done. So I spotted that pattern, but then I'm not just going to buy the pattern, I want to have an awareness of the overall move. So this thing was moving on heavy volume and was headed up higher. What I also saw was this over here, what those flags, SL. What does SL mean? SL means that this stock was a sector leader for those weeks. What's a sector leader? Depending on where you go, it might just be something on somebody's list. The way that I define my sector leaders is that it's in either one of the top 20 industry groups or a rapidly emerging industry group. Great, that's criteria number one. Criteria number two is that it needs to be one of the leaders in that group. And how do you know that? It's going to have price making higher highs, or it's going to have relative strength making higher highs, or it's going to have both. So for this ticker here, IAS, it had those qualities on those weeks there. Didn't have them over here, but part of what got me interested in the trade is that when sector leaders consolidate, they often reemerge and can give great opportunities. What I liked about this one was that when it formed this part of the double bottom and it started to come back up through the 50-day moving average, I was able to say, okay, I'll get in if price breaks above that day's high, and I'll set a stop below that day's low. Why the daily range? Why would I use the daily range? The reason why I would use the daily range in this instance is because if price breaks out, it's not just getting above the daily high, it's also getting above a descending trend line. It's also getting above the 0.5 Fibonacci retracement, and it's a continuation pattern, so it would be continuing higher. Something else that I noticed on this chart was that the stochastics up here had a positive cross, positive momentum shift. All those things are on the radar as well. Why would I place my stop just below the day's low? The reason why is because it's not just below the daily low, it's also back below the 50-day moving average. So if price were to break out and then fall right back below that level, that would invalidate the idea. And so on that particular trade, the risk was only about 5%. And so if I bring over the current chart, let me bring over the current chart. Here's a live chart. And I'll put my annotations back on here. You can see that price broke out a couple of days ago, hit my first scale out, got fairly close to my second scale out, and today it's pulling back. At this point, my risk is off the table. I've raised my stop to my break-even point, and I've shared all this with our members inside our group. Everybody's getting these updates in ahead of time. Really, like I'll give these updates the evening before, so that way everybody can follow along, and it's not just so that way everybody else can follow along. It's also for me. I like to do this work at night and the evenings as well. Now, whether I had a service or not, this would be the same process. So let's see what other questions you guys have. From Noah. Noah says, thank you so much for your time. Have been learning so much from you on the sidelines. Thank you for your time. My pleasure. I love doing this, and I feel very privileged to be on here doing this and helping everyone out. If you do like these, just make sure that you like and subscribe, and if you're, depending on what platform you're on, share it out so that way the word spreads and we're able to help even more people. Crazy Karthik looking for advice and tips on scalping. I don't scalp. Scalping is when you're in trades for a couple of minutes, maybe even a couple of seconds, and you're just trading for pennies. That's not what I do. However, if I were to do that, then the reward to risk equation, I think, would still be the same. You would still be looking at the same metrics. You'd still be looking at win rates. You'd still be looking at reward to risk ratios. You'd still be looking at position sizing. You'd be looking at how often are you turning over this edge that you're trying to look for. The journaling component of trading is one of the most important things. It's how you're going to not only track your process, it's going to be how you're going to improve and how you're knowing if you're making good decisions over time or not. Too many people, I feel, are focused on their P&L. Like, you'll have your P&L up on the screen and you'll be looking at it multiple times a day, but my broker is closed. Like the platform for the broker is closed all day. I don't look at that at all. I only open up the brokerage account when I'm getting ready to place an order, and after I place my orders, then it gets closed. What else do I need to look at that for? I find that it's a major distraction if I have the P&L up on the screen all day long. How is it helping me? How is it helping me make better trading decisions? It's not. So took that off the screen and it helped quite a bit. Yeah, so that also goes in line with what we were talking about earlier as far as information overload, right? And trading routines. You want any information that you're going to allow into your field of vision should be helping you. If it's not, it's got to go. And that's massively true, especially for trading part-time. And when you're trading full-time too, that doesn't mean that now all of a sudden you're glued to the screens. look at me. I'm here talking to you guys. I'm not busy looking at, like, what's the next trade going to be and doing all that. No, it's the big difference I feel between part-time trading and full-time trading is just the account size. Are you trading large enough to support your lifestyle? Yes, great. Now you're trading full-time, or you're generating full-time income from your trading. Noah says, how old were you when you started, and how long have you been trading for? So I started when I was about 18. I just graduated high school. 18, I think I was 19, because the main story that I talk about, how I got started in the Trading Mind Wheel book, 1999, if you aren't familiar with that time period, 99 was the height of the tech bubble. Got started there. Had no clue what I was doing. I struggled mightily because of it. I struggled for the first 10 years that I was trading. And then it was finally in 2010, 2011 that I started to turn the corner. And how did I turn the corner? It was because I finally got people around me that knew what they were doing and were able to give me advice, mentor me. And within a year, I went from not knowing what I was doing, constantly losing money, to starting to make real progress, real success. And then those people that were mentoring me, that was part of a group, they invited me to be a leader in that group. Because why? I was trading part-time, and I found ways to do what they were doing, but far more efficiently. And so I was not only able to give that to the other guys that were trading professionally, but to the rest of the group. And then that, by extension, I wanted to do that part on a much, much larger scale. And so here we are. Yeah, love what the analogy of what's going into the sauce. You really do. You really do, especially when it comes to trading and buying somebody else's research. I was a subscriber to Investors Business Daily for a long time, and I read Bill's book. I've spoken about it on the show before. I still have it sitting on my desk, How to Make Money in Stocks. This is another fantastic one that I highly recommend. But there's certain proprietary things in the paper that you don't know exactly what's going into certain things. So it's you have an understanding, but there's a certain part where there's a leap of faith. I find that full transparency of what's going in and why just makes it a lot easier to understand, a lot easier to help others, and it makes it easier to take what you want, leave the rest behind. And a problem that some people have with that, or maybe why they don't do it, is because the fear that you're going to be cloned. I don't have that fear, because most people are not going to clone exactly what you do. And nobody can be a clone of you. We all come in with our own set of beliefs and styles and belief systems. All that kind of talk is in my book here, The Trading Mind Wheel. But even if they did clone, so well, great. We both get to make money. Like there's, it's an infinite stream of opportunity. The market's not going anywhere. The more that we're all able to win, I think that that makes it better for all of us. Gonna have to hop off in another moment here. I think that might be a good place to end it. So, let's see, I think there's one more question in here. How can I keep myself from getting stopped out of a wood quality trade. What's a wood quality trade? We'll just say, how can you get yourself from getting stopped out of a quality trade? Make sure that you have multiple levels of confluence around where you're placing your stop. So like I showed you before in that trade that I took in IAS, you want to have multiple layers of confluence around the stop area. And that's not a guarantee that you're not going to get stopped out, but if you're able to build multiple layers of confluence around a stop area, it's like building a floor that's made out of concrete versus having wet paper, right? Like a wet paper towel as your floor. The more that you're able to stack, the more firm that floor is going to be, and you'll be able to trust that stop a bit more. Lots of ways to do that. We talk about that inside the Mara Elite program. If you're interested in that, go to marawealth.com. And that's it for this week. I appreciate you guys. Have a great, wonderful, blessed weekend, and I'll see you next time. Take care. Much love. Peace out, everybody.